Hello everyone, I am Pratap here. We are at part 8 of lesson 21. This is also the last part of lesson 21. It is about a dynamic fine-tuned zone. And this lesson is having dependency on the earlier lessons. In case if this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action at our NeoStock YouTube channel. You just click on the community tab at our channel. You will get an access to this post. This post is having a link, a YouTube playlist link that will take you to all the training lessons. You just click on this link. I am clicking on this link. Now we are in the playlist Supply Demand Zone Price Action course. This playlist is having all the training lessons. You just need to scroll down to the bottom of this page. Here, starting from lesson 1.1, you have all the training lessons are available in an order. Please go through all these lessons one by one, and then you can get into lesson 21. That is the part 8 of lesson 21. Also, I am providing the link to our Telegram channel in this YouTube video description. Please join in the Telegram channel. It will be useful to you. Each time when we release a new YouTube video or any other important update, we will provide in that channel. Now let's get into part 8 of lesson 21. This is about dynamic fine-tuned zone. So what is a dynamic fine-tuned zone? It's very simple. The lower time frame fine-tuned zone created inside an HLQ zone during the live market is named as a dynamic fine-tuned zone. In general, what you do? Before the market starts, you will fine-tune your high liquidity zone. There you identify a fresh fine-tuned 5-minute zone. That is the real institutional order flow. And then you wait for the trade. But sometimes what happens? These lower time frame fine-tuned zones will be created during the live market. And many times we ignore these dynamic fine-tuned zones. You will be waiting until the prices reach into the fine-tuned 5-minute zone that you already planned your trade. By ignoring the newly created fine-tuned zones during the live market. And those newly created fine-tuned zones sometimes may give you the trades. And your prices may not be reaching up to your planned 5 minutes fine-tuned zones. So that is the reason why it is very important to observe during the live market. How you have to observe? Apart from my planned fine-tuned 5-minute zones, are there any new fine-tuned 5-minute zones are getting created during the live market? Suppose you are using a 75 minutes high liquidity zone. What happens sometimes? A new 15-minute zone will be created during the live market. Inside that 15 minutes 5-minute zone, there could be again a fresh fine-tuned 5-minute zone. That is the one first you need to plan your trade. But do you get that opportunity on the same day? Sometimes you may get, sometimes you may not get. Either one can be possible. But if you get, you can plan a trade on the same day. Let us look into more points, you will get clarity. We plan our trade if the retracement happens during the same live market. That's why we are calling them as a dynamic fine-tuned zones. Generally, you plan your trade before market starts. And you identify fine-tuned zones. But these fine-tuned zones are created during the live market. That's why we named it as a dynamic fine-tuned zone. This is very, very important. And especially the reason behind why I prepared this lesson is mainly because of this point. In lesson 16, we already learned when a zone can be violated. All the conditions we learned, right? Based on the conditions, we are in a position to identify, okay, this zone is going to be violated. Why it is going to be violated? Because there is no fine-tuned 5-minute zone. Because the price structures in that zone is not good. Or maybe the fine-tuned 5-minute zone is already tested. Like that, several reasons we discussed, and you know that the zone will be violated. When you know the zone will be violated, what you will do? You won't plan any trade in that zone. Am I right? Yes. Because anyway it is not having any fine-tuned zone, and you know that it will be easily violated. You just ignore that zone. You don't bother what's really happening during the live market, because you are very sure the zone will be violated. But sometimes what will happen? Institutions create a dynamic fine-tuned zone. In those zones where you identified as they will be violated. So they won't be violated because sometimes institutions created a dynamic fine-tuned zone. And what happens? Maybe the same zone again will be retraced back during the same live market, and we get a trade opportunity in the zone. But what we are doing? Because we are thinking the zone will be violated, we just ignored during the live market. We never look into that zone, what's really happening. Your focus will be on the other zones that you already planned your trade. Probably in those other zones, that day prices may not be reaching, but the one you are ignoring, that day institutions created a new dynamic fine-tuned zone. The same intraday, the same live market, once again prices retraced back and you got a trade opportunity, but you ignored it, and you will be missing a very good trade opportunity. That day that particular dynamic fine-tuned zone would have given you very good intraday profit. And later on you will realize how I missed it. Because why we missed? Because we are thinking as per the lesson you learned in as per the concept you learned in lesson 16, the zone will be violated, and just ignored it. That's why please don't do that. This is one of the reasons why I am making this video. I don't want you people ignore a zone until it is violated. You know that it will be violated. Many times the zones will be violated, I will agree. But sometimes those zones won't be violated because institutions are creating dynamic fine-tuned zones. Let me show you good examples, you will get clarity. But before that, one more important point you need to understand. It is also possible institutions create dynamic fine-tuned zones in a zone already having good order flow. What is the meaning of having good order flow? A zone already having a fine-tuned 5-minute zone. This point I already told you. We already discussed it. You are waiting for a trade in your fine-tuned zone, but during the live market, institutions created a new dynamic fine-tuned zone. You might not have ignored it, or you might have ignored it. You might have ignored it. You are waiting for prices to reach your zone, your fine-tuned zone, but before your zone, the newly created fine-tuned zone is there, but you already did your analysis. You are just ignoring the price action in the live market. Because you are ignoring the price action, that day prices never reach your fine-tuned zone. Later on you will realize a new fine-tuned zone is created in that. Institutions again pushed the prices into the same dynamic fine-tuned zone on the same intraday. It got a good trade and it gave a good profit, but you are just waiting prices to reach your already existing fine-tuned zone, and that never gave you the profit, and that because prices never reached into your fine-tuned zone. So this is the reason why you always must observe what is really happening in the market. That is the reason why you are learning this concept, dynamic fine-tuned zone. By learning this concept, you will understand during live markets also fine-tuned zones will be created. For those fine-tuned zones, we have given a name called dynamic fine-tuned zone. Hope you got the clarity. Now let me show you some good examples. Look into this stock. This is a Conquer 75 minutes high liquidity supply zone. And our software identified this zone as a stock near the 75 minute supply zone, high liquidity supply zone. Because it is there in our list, what you will be doing? You have to plan a trade by fine-tuning this zone. If there is a fine-tuned zone, 5-minute zone, you know that this zone will be having a good order flow, you can plan your trade. If this zone is not having a fine-tuned 5-minute zone, you know that this zone will be easily violated. So for that, what you are doing? You are trying to fine-tune in 15 minutes time frame. So now let's go to the 15 minutes time frame. Look into the 15 minutes time frame. Look into this price action. This is a very bad price action because it doesn't have any proper 15 minutes order flow. When you have such kind of price action, definitely your zone will be violated. That way you are identifying this zone will be violated. Provide, what is, except one condition. What is that one condition? If institutions does not create a dynamic zone, then this zone will be violated. What if institutions create a dynamic zone inside? We get a trade opportunity. If you are thinking, anyway this zone will be violated, and if you ignore this stock, what happens if institutes creates a dynamic fine-tuned zone? You will be missing a great opportunity. See what happened on this day. The next trading day. On this day, our software identified stock is near to this zone at the end of the day. So next trading day, let us see what happened to the prices. See here, after that, this is the first 15 minutes candle, 9:15. After that, prices were moving up and down. And see here, a rally candle is created, a base candle is created, a drop candle is created, and then a follow-through candle was there. But it is a failed candle, ERC candle. But anyway, we have a rally base drop. Now let us draw the zone. See here, we have drawn rally base drop. This is a 15 minutes fine-tuned dynamic supply zone. This is a 15 minutes fine-tuned dynamic supply zone. But is it good enough for us to plan our trade? No, it is not good enough. The reason is, inside this 15-minute zone, again we should identify a 5 minutes fine-tuned dynamic supply zone. Dynamic zone means the zone that is created during the live market. If 5 minutes fine-tuned dynamic zone is there, then only we plan our trade. Otherwise, this one also will be violated easily. Suppose there is a fine-tuned 5-minute zone available, let us assume. Then what could be the target in case during the intraday if prices reaches here? The target will be the next one. Here we have some zone is there, we have some ERC candle, 3 base candles, rally candle. You can draw a 15-minute zone. Even if it is not a really good structure, still you don't want to consider this ERC, you want to consider this as a leg candle. You have 1, 2, 3, 4, 5, 6, 7, 8 candles. Okay, fine. For target point of view, your target zone can have any number of base candles. No issues. But entry point of view, you cannot take this zone. Okay, anyway, our concentration is on this zone. In this newly created rally-based drop 15-minute zone, is there any 5 minutes fine-tuned dynamic zone is available? Let us check. So now let us change the time frame to 5 minutes time frame. This is the Conquer 5 minutes time frame. Now see, look into this inside 15 minutes. Yes, there is a zone is available. You have a rally candle, you have 2 base candles, and then you have excellent drop candle. Definitely we have an excellent fine-tuned 5 minute zone is there. Let us draw the fine-tuned 5 minute zone. This is the one. And this fine-tuned 5 minute zone is a dynamic supply zone. Why we are saying dynamic zone? Because it is created during the live market. Anything that is created during the live market on that particular day, we are calling it as a dynamic zone. Next day it is going to be a normal zone only. But during the live market, until before the market closes, we can call this zone as a dynamic zone. Once market hours is completed, now this will become a normal zones only. Okay. So because this dynamic zone is created, during the next retracement, you can plan a trade. The next retracement may happen on the same day, or may happen on the following day, or may happen after 1 month also. At the time again, your software suggests you will plan your trade. But during the intraday, if prices enters, definitely you can take a trade. Why? Because already your software suggested this high liquidity zone. Now it is very easy for us to plan our trade in this dynamic zone. Now let us check what happened. Market came down again moved up, and see, now it got an entry in this zone. Because this is our entry zone. We got the entry. So Conquer 5 minutes fine-tuned dynamic supply zone gave an entry. This is the dynamic supply zone created during the live market. The same live market on the same day, we got the entry, intraday entry at 5 minutes time frame. See, after that, market moved up and down and finally reached the target. So that's why during the live market, you should not miss such kind of dynamic zones. Let us look into one more example. Now this time this is a HCL technology, 75 minutes high liquidity demand zone. So here we have a rally, 1, 2, 3, 4 base candles, again a rally candle. This entire thing is a demand zone. See, prices are near to the demand zone. That's why our software suggested this stock is near the 75 minutes high liquidity demand zone. When our software will suggest at the end of the day, today after market hours, our software suggested this stock. So in the next trading day, you have to plan a trade in this zone if there is any fresh fine-tuned 5 minute zone is available. Let us check this existing zone is having any fresh fine-tuned 5 minute zone. So first you have to go to 15 minutes time frame. So inside the zone 15 minutes time frame, now we are seeing a drop candle, 2 base candles and a rally candle. Now we can draw a zone. Is it a dynamic zone? No, it is not a dynamic zone because this price action is already completed. This is the previous price action. Now we are after the market hours. We are not during the live market hours. After the market hours only, our software is identifying these zones. Now prices are near to this zone. So after market hours, we are analyzing this stock, finding fine-tuned 5 minute zone for our next trading session. So that way in 15 minutes we identified an excellent drop base rally. Now let us draw 15-minute zone. So this is the 15-minute zone we have drawn. But is it good enough to plan our trade? No. Because always we should have a fresh fine-tuned 5-minute zone. Not fresh fine-tuned 15-minute zone. If fresh fine-tuned 5-minute zone is there, then only we confirm we have a very good institutional order flow. Where you have to identify the fresh fine-tuned zone? Inside this 15-minute zone. Because inside 75 minutes, we have a 15-minute zone. Now inside 15 minutes, we should have. Inside means it should overlap. Not exactly inside. Maybe at the distal line it can overlap, or it proximal line it can overlap anywhere, or it can be in the middle exactly, anything. Okay, because until 15 minutes the structure is good. Now we should look into 5 minutes time frame. So now I am changing the time frame to 5 minutes. Now look into the 5 minutes structure. We have a rally, we have base candles, we have an excellent leg out. Now can we plan a trade in this? The answer is no. Why? We have a rally, base rally. See the number of base candles in this zone. 1, 2, 3, 4, 5, 6, 7. You have 7 base candles in this zone. We should have a maximum 6 candles. Minimum 1, maximum 6. Beyond 6, if base candles are there, there are higher chances the zone will be violated. That's why we don't plan a trade in this zone. Because we identified this particular stock will be this particular 75 minutes high liquidity. This entire area is 75 minutes high liquidity zone. Now we identified this 75 minutes high liquidity zone will be violated. But let us see what happened to the market. So this is what at 15 minutes time frame before starting the next trading session. We, as per our software, identified stock is near to this zone, 75 minute zone, but now we are in the 15 minutes time frame. Now let us observe 15 minutes candle once market is opened. See here, once market is opened, there is a drop candle, there are few more candles. Now you see a drop candle is formed, 1, 2, 3 base candles are formed. Next there is a rally candle. That means a new 15-minute zone is created again. Now you can draw a zone and you can call this as a dynamic 15-minute zone. Dynamic 15 minutes demand zone. Why? Because this zone is created during the live market. Now we are in the live market. Now it is created during the live market. Now we can draw the zone in the live market, drop base rally. See here, drop base rally, we have drawn the zone. This is a 15-minute zone. But is it good enough to plan our trade? No. Inside, you should identify a fresh, fine-tuned 5-minute zone. You may ask a question. Anyway, it is a dynamic zone. Definitely the 5-minute zone will be a fresh zone, you may say. My answer is no, it need not be a fresh zone. This is a good example, it will tell you. Now let us get into the 5-minute zone, 5 minutes time frame. See, now we are in the 5 minutes time frame. See the structure inside. Here you have a rally candle, AERC candle, you can call it as a leg candle, leg in. See, you have 3 base candles and then you have a rally candle. After that, see, we have a good rally, base rally is there. See, after that prices came down and they picked up the orders from this zone and then again started moving up. That means this zone is no more a fresh zone, this 5-minute zone. So you cannot plan a trade in this zone. This will be easily violated because it is already a tested zone. Already some of the institutional orders are consumed from this area. So you can't plan a trade in this fine-tuned rally, 3 base candles and rally. But institutions also created one more fine-tuned zone, 5-minute zone. See here, you have a rally candle, you have a base candle, you have a rally candle. See, this zone is overlapped with this 15-minute zone. That's why I told you earlier, a zone need not be exactly inside. It can overlap at the proximal line, or even it can overlap at the distal line. So in this example, it is overlapped at the proximal line of 15-minute zone. Now let us draw the dynamic zone now. Because it is in the live market, we are calling it as a dynamic zone. See, rally, base rally we have drawn. So next time when prices are entering into this zone, definitely you can plan a trade. Let us see what happened. But now I will show you from the 15 minutes time frame. By the time prices enter into this zone, because the same day prices retraced back, I'll show you in the 15 minutes, because 15 minutes target zone also we should identify. See here, prices entered into this zone, but this is 15 minutes time frame, not 5 minutes. Why I'm showing you 15? To identify the target zone. See, this is a fine-tuned zone is 5 minutes only, but target is 15 minutes. So here you have a drop, base, a drop is there. Let us draw this 15-minute supply zone, which is going to be a target. This is our target. We take an entry here, and when prices reaches here, we will exit. Now let me show you the same in 5 minutes time frame. So this is how. Once prices enter inside this zone, you can plan your trade. Somewhere here you can plan your trade. So you got the entry. HCL Tech 5 minutes fine-tuned dynamic demand zone gave an entry. Now what is the target? The 15 minutes supply zone, what we have already drawn. But see what happened. The next candle itself it reached the target. That means the trade is completed in just 10 minutes. In this candle, 5 minutes candle, it gave an entry. In this 5 minutes candle, it reached the target. Definitely less than 10 minutes, the whole trade is completed. But see, again, in the same day, after that, once again prices came here, picked up the orders. See, after that again prices are moving in this candle. Again it reached the target. That means you got two trades on the same fine-tuned zone. Excuse me. During the intraday, on the same fine-tuned 5-minute zone, you can take whether it is a normal fine-tuned zone or dynamic fine-tuned zone. Definitely you can accept second trade during the intraday. If the day is changed, you cannot take a second entry on the same zone, unless this is also a high liquidity zone. Anyway, it gave a second trade, and again second time also it reached the target. I'm just telling you how powerful these dynamic zones are. That is the reason why always in the live market you should also focus whether there are any dynamic zones are getting created. That means a new zones are getting created in the live market. What kind of zones? Fine-tuned zones. Inside a 15, a new 5-minute zone can be created. Or inside a 75 minutes, a new 15 minutes, inside that again a new 5-minute zone can be created. Either thing can happen. Existing 15, a new 5-minute zone can be created. Or existing 75-minute zone, a new 15-minute zone will be created. Inside, a new 5 minutes fine-tuned zone should be there. Any of these possibilities you can consider. There is no rule that every time you have to look for new 15-minute zone. No such kind of rule. Existing 15-minute zone, a new 5-minute zone can be created. In that new 5-minute zone, again prices enter, you can take another trade. So this is how you should understand the fine-tuned zones. Hope next time you won't forget this concept. The main reason behind why I planned this training session is many of you people are ignoring these zones getting created during the live market. Whatever the analysis you do before market hour starts, you are just blindly depending on that analysis. Because of that, sometimes you are missing these trade opportunities. That's why during live market, you should also keep an eye on the other high liquidity zones suggested by our software. Some stocks may be violated as per the concepts we learned at lesson 16. But until they violate during the live market, you should check whether they really violated or any dynamic zones are created. See, once a zone is violated, after that any zones created, they are invalid. We can't plan a trade. As long as the zone is not violated, it is a valid zone. Within that zone, any new dynamic zones are created in the live market. They are all valid zones for our trading point of view. Hope this information is clear. In case if you have any questions, please put them in the comment section. I will try to address. So this is the end of the session. In the next session, lesson 22, let's discuss about the new strategy that we've been discussing in the recent time. It is a newly developed strategy. That is the LTF zone as an origin to the HTF zone. We have seen higher time frame zones. They are having origin from the lower time frame zones. Here LTF means the general English word lower time frame I am talking, and HTF means general English word higher time frame. It is not your HTF, ITF or LTF. Please remember, it's not that. Lower time frame zone as an origin to the higher time frame zone. Maybe your higher time frame could be a daily, lower time frame can be one time frame below, maybe 75, or maybe 2 time frames below, it could be 15 minutes, or 3 time frames below, it could be 5 minutes, anything. Any of these below daily zone we are calling lower time frame. When you are referring daily as a higher time frame. Similarly, if 75 minutes is your higher time frame, maybe 15 minutes could be a lower time frame, or even 5 minutes could be a lower time frame, anyone. So those zones are responsible for the creation of higher time frame zones. So that kind of concept we developed recently, that we will discuss in our next lesson. Hope this lesson is useful to all of you. Let us all meet again in our next video. Thank you.